Hello, I'm Katrina M. Craft, and you've just tuned into the Craft More Cash podcast, where finance meets innovation and strategy becomes reality. With over 2 decades navigating the twists and turns of accounting, tax, and business strategy, I've had the incredible opportunity to work with startups and Fortune 500 companies alike, crafting pathways for businesses to grow and thrive. I've tailored my expertise to serve the unique needs of industries ranging from real estate to creators to marketing and beyond. I'm on a mission to equip individuals with the financial savvy they need to succeed. Through my Wealth Intelligence course, I'm all about breaking down complex concepts into actionable strategies for business owners. So buckle up and let's dive into the world of financial success, innovative strategies, and the stories that make us all want to keep pushing forward. Hello, I'm Katrina M. Craft, business profitability coach and tax strategist. Today, I want to talk about cash management for your business. We want to make sure when you're talking about cash management that you do not commingle your business and your personal funds. You want to make sure you have a business account that is used for business activity only, and you're not using your personal account for business activities. It's very easy to miss expenses and not prepare the proper financials when you have expenses on your personal account and you've forgotten about those. So make sure to use your business account and do not commingle. Another area I suggest is to have a business credit card. Even if you don't have a business credit card, if you have a personal card that's only used for business, that's very important, because if you do have interest, if you're not paying your credit card off at the end of the month, that interest could be deducted. If you are commingling funds, you cannot deduct the interest because it's hard to calculate what portion of the interest is for personal and what part is for business. So make sure you are using the proper credit card and it is not commingling funds. Another area that I want to talk about, we're going to give 5 tips on what you need to do to make sure that you're having better cash management. One area is to forecast regularly. So create a budget, create a forecast where you know what is projected for your business. You know the cash that you're expecting to get by looking at your receivables, also looking at the people that are on recurring invoicing, and you're looking at your sales, your projected sales based on historical data, or if you're doing specific events or launches that are going to be important and you know that you're going to bring in cash flow. Make sure you're budgeting that. That is on the income portion. You also need to budget in and forecast your expenses. There are some expenses that you know that are fixed. So if you have an office space you may be renting, you know that's a fixed expense. If you have utilities, if you have payroll, a lot of the areas that are fixed expenses, you definitely need to budget. Then you may have variable expenses or things that are not fixed there because you're doing a special event, a special launch, where you're going to have some expenses that are not regularly every month. Those also need to be budgeted and they need to come in line with the income that you're expecting. You want to make sure if you're doing the project that the income you're projecting and the expenses that you're having because of the event, that you are still profitable in that event. That's very important on the forecasting, and make sure that you're doing regularly forecast also, and that you're planning and budgeting based on your projections and historic. So looking at historic financials, that's why it is important to have financials, because it gives you a history of potential expenses, income, and it allows you to plan better. That's why I really recommend that you have a balance sheet and a profit and loss where you can go back and look at historical data to do great planning. Second tip, invoice promptly. Send out invoices as soon as possible, except now I have a tip for you that's a tax tip. If you do not need the income in the year and it's toward the end of the year, wait to invoice, because you may want to not pay taxes on that. If you receive it December 31st, if you were to invoice, you may want to wait to January 1st, because then that gives you more time to allocate expenses against that income. So that's the only time that I would say you may not want to invoice promptly, because at the end of the year, it may be some tax planning that goes around invoicing and you may want to wait. Also, follow up on those payments. So look at your receivables. I do have a form that tells you and suggests how often you should look at various items of your cash flow. So if it's daily, if it's weekly, if it's monthly, if it's quarterly, and annually. So there are things you should do in each quarter, each week, each day, each month, each year that will be important for managing your cash flow. And I will have the link to that resource below the video. So make sure you look at that resource and grab that so that you'll know how to better manage your cash flow. Another item is third tip, manage your expenses. So keep a close eye on your expenses and cut unnecessary expenses. There is an app, and it's called Rocket Money, that if you put your accounts and attach your accounts to the Rocket Money, it's going to tell you what subscriptions that you have. Sometimes we pay for a subscription, we're in a yearly subscription, and we don't know about it or remember it until it comes around at that year. Or we may be in a monthly subscription that we're not really noticing. So that is one area and a tip on how you can manage your subscriptions better, because it will alert you when subscriptions are coming up and also alert you what subscriptions you have. That's a great way to look at your money and manage the money. Also, if you're doing financials, you have a bookkeeper, you have an accountant that's helping you and going over your financials, they're going to see, or should see, that you have recurring subscriptions, and that could be an item that they question to see, are you using this subscription? Do you need this subscription? I know that when I have reviewed my clients' books, I often ask, do you need the subscription? And some don't even realize that they have been paying for that regularly. And that's why it is important to have a second look, a second set of eyes, and a person who's doing your bookkeeping, a person who's helping you with your financials, look at your numbers and your expenses to help and guide you. As a business profitability coach, that's what I help with. I help with tax strategies. I help with profitability management, cash flow management, and budgeting. If you're interested in profitability coaching for your business, please reach out to us at CatrinaMCraft.com, and we'll share more information with you about that. Fourth tip, build a cash reserve. We know that there may be ebbs and flows in your business, especially if you're doing a special project, a special event or launch, and you're receiving an inflow of cash. We'll save that money for a rainy day. That's the ebbs and flow of business that we all will have. And we want to make sure that we do have reserves. So if we do want to take a vacation, we are not worried that either the business continues or we have enough funds to cover payroll. Also, if we have a special event or a project that we want to work on, we know that we have the funding to do those types of things. So build a cash reserve is the fourth tip. Fifth, use financing wisely. So I suggest, if you can and you have a great business relationship, get a line of credit with your bank. Use the credit and pay it off. Even if you don't need it, that's a way to get larger business credit. I've always been told, and I'm a firm believer, you get the credit when you don't need it. That means that you get the line of credit, you use it, you pay it off on time. You use it, you pay it off on time. What will happen is the financing company sees that you're a great business owner and you pay timely. They will automatically, a lot of times, just increase your line of credit. You won't even have to ask for it. So show that you're consistent in payment, show that you use it and you pay it off, you use it and you pay it off. they will increase your line and give you special offers as well, because they want to incentivize you to use your credit. Also, you may want to do some short-term loans to bridge the cash flow gaps, and you could use your credit cards as well. And that's a great way that it gives you about 20 days. Even if you're paying off your credit card at the end of the month, that gives you about 20 days flow a lot of times, depending on when you make the charge, before you have to pay that bill in full. Also, I want to just throw it out that there are incentives on a lot of credit cards right now. Not only the travel incentives, if you're traveling a lot, you get extra points, but there's cash back bonuses. So depending on what type of credit card you have, you could get 2%, 3%, 3.5%, 4% if they're running different specials. So make sure that you're aware of your cashback bonuses on your credit cards, or if you're getting travel perks or lodging. It really depends on what's going to be best for you if you're traveling a lot versus if you rather have the cash in your bank. So let's remember these 5 tips when we're talking about cash management: forecast regularly, invoice promptly, manage expenses, build a reserve, and use financing wisely. And most important, do not commingle your business and personal. If you would like me to coach you on business profitability, and your business is in real estate, you are a creator, you are a coach, I would love to help you, and let's craft more cash. Thank you.